Hey guys, this is Accountant 𝐬𝐭𝐢𝐦𝐚 here, and in today's video we are going to talk about estimated tax payments. We are halfway through the year and I know some of you still haven't filed your estimated tax payments yet, and that could be for many reasons. Maybe you don't know exactly what they are, you don't know if you're required to pay them, you don't know what they're due. So that's what we're going to talk about in this video today. So my goal for you after you watch this video is that you know exactly what estimated tax payments are, you know who's required to pay them, you know when they're due, you know the formula that you need when determining how much to pay them, you know how to make those payments, you know what happens if you don't pay them, and then we're going to talk about some state requirements too, because don't forget, when you're making your estimated tax payments, you have to pay estimated taxes for your state and city as well, if it is applicable. But before we get into it, if you guys are new to me, hey, hi, and welcome to my network. My name is 𝐬𝐭𝐢𝐦𝐚. I am an accountant, a CFO, a tax strategist. You can call me either of the three, and I help multi-six-figure coaches and consultants make millions while paying little to no money in taxes. We're able to do this through business tax preparation, accounting, and CFO services to help you manage and maximize your taxes and bookkeeping. So let's get into it, guys. I play too much. I think about this song every time I say that. All right, I'm done playing. So let's talk about it. Estimated tax payments. What are they? So estimated taxes are how individuals pay federal and state income tax on income that is not subject to withholding. So as part of payroll tax law, employers are required to withhold income tax from their employees' paychecks. But as coaches and consultants, as self-employed individuals, as people who earn passive income, you may not have an employer to withhold taxes on your behalf. So in that case, you must calculate and pay those taxes yourself. These payments are known as estimated tax payments. They're also known as quarterly tax payments. So if you hear someone say either of the two, those words can be used simultaneously, okay? Let's talk about who is required to pay estimated taxes. So individuals should pay federal estimated taxes if they expect to owe $1,000 or more of tax when they file their tax return. So this doesn't just apply to coaches or consultants. This doesn't just apply to self-employed individuals. This applies to all individuals regardless of employment status, which means that all of the following people may be expected to pay estimated tax payments. I'm going to give you some examples of people who are responsible for paying estimated tax payments. So of course, coaches and consultants, right? Sole proprietors, small business owners, independent contractors, gig workers, partners and partnerships, S corporation shareholders, individuals who report interest, dividends, rents, or royalties where there is no tax withheld. You may be required to make estimated tax payments. Recipients of unemployment compensation if they aren't taking out any taxes. Recipients of taxable Social Security benefits. You know, some Social Security benefits aren't taxable, but if yours are taxable and you aren't withholding taxes, you may have to pay estimated tax payments. So pretty much anyone whose withholdings will not cover all or most of their tax liability is responsible for making estimated tax payments. So if you don't have taxes coming out of your W-2, if you don't get a W-2 where you're able to take those taxes out, you must pay estimated tax payments. Make sense? All right, let's talk about when estimated tax payments are due, because they're typically due in 4 equal installments. Now, the dates that they due aren't equal, right? So you may say, oh, they're quarterly tax payments, so they're due every quarter, they're due every 3 months, but that's not how it works. The first quarterly payment is due April 15th. The second one is due June 15th, so be careful because May, June, that's just 2 months after, right? The third one is due September 15th. And the fourth payment is due January 15th of the following year. So if you underpay or overpay in your estimated tax payments, when you file your taxes, you'll be able to settle that, and any overpayment, you can get that back. Any underpayment will be due at the time that you file your taxes. Let's talk about how much you can expect to pay in estimated tax payments. This is a straightforward calculation if you know exactly what your income, deductions, and credits will be for the current year, right? So right now we're in tax year 2022. If you know what your income, deductions, and credits will be, simply divide your anticipated tax liability by 4 to determine each quarterly payment. But people who are self-employed, most coaches and consultants have income streams that vary, so you got to put a little bit more work into figuring out your quarterly tax payments, but I'm gonna help you with that today, okay? So stay with me and I'll help you figure out those payments. So in general, estimating tax liability based on income that you haven't earned yet is a bit tricky, right? So most people begin their estimated tax calculations with prior year tax data. So with the help from an accountant, they'll help you adjust the prior year's tax return for current year changes. That way you can estimate your future tax liability, and that is what you're paying estimated tax payments on. So a good accountant is going to help you figure out this calculation by asking you some probing questions, right? We're going to ask you, did you move, purchase, or sell a home? We may ask, did you get a new job or start a new business, right? Because all of these things are going to affect your taxes. Did you anticipate your income will change? If so, from what sources and by how much? Did your filing status change due to a marriage, divorce, or separation? These are just some questions that will help us determine what your tax liability will be for the current year. Did you have a child? Did you adopt a child? Did your adult children surpass the age where you get the, what is it called, the child tax credit for them? Are they over 16 now? Are you eligible for new tax credits or deductions? Will new tax regulations affect your ability to claim a credit or deduction that you've already claimed or that you can now claim this year? You know, there are many considerations that go into what you'll have to pay in taxes for the current year, and if you aren't exactly sure, I would recommend for you to guess. But once you work with a skilled accountant and you guys figure out, you know, what those changes will be for the current year, after adjustments are made to prior year numbers, the accountant will divide the resulting annual tax liability into 4 equal installments. And as the year goes on, taxpayers can easily tweak the remaining payments to reduce the likelihood that you'll owe during tax time. Or if you notice that you've been overpaying, maybe fourth quarter, you don't make a payment because you've already overpaid in taxes. So I said that to say that it doesn't have to be spot on, but working with an accountant is going to help you get it as close as possible. Now, if you want to go at this alone, there is a formula that can help you. So that formula is income, and that's gross income, right? Because you're starting from the top. Gross income minus expenses, all of the business expenses, right? Your operating, your payroll, your depreciation, your interest, your taxes, your amortization, all of your expenses, right? So income minus expenses minus credits and deductions equals your net profit. So those credits and deductions could be your child tax credit, it could be child care credit, it could be itemized deductions, it could be your standard deduction. Let's say if you're filing head of household, you can claim a standard deduction around $18,000. So the first $18,000 of your income you don't have to pay taxes on. So that's just an example, right? So keep in mind, income minus expenses minus credits and deductions equals net profit, and then you're going to take that net profit, you're going to divide it by 4, and these are your estimated tax payments. You want to make those payments according to the due dates. Let's talk about how to make those payments. Your estimated taxes can be paid using the estimated tax payment form. So if you Google IRS form 1040-ES, that is the form that you can fill out to take care of your estimated tax payments, and then you just mail in a check or a money order, right? You can also do it electronically through the, I want to say is electronic taxpayer payment system. So I want to say it's the ETPS system. Let's go with that, right? So you could do it online, or you can fill out IRS form 1040-ES. Estimated taxes should be paid at least quarterly, by the due date that we just discussed before. But if you can send payments to the IRS more frequently, then you may want to do it that way. So for some taxpayers, it's easier to manage cash if they make smaller monthly payments. And this is what I actually recommend for some of my clients. So we set up our business budget in a way that every time a client pays us, anytime money comes into the business, we're setting aside, whatever the percentage of taxes that's going to be due. So let's just keep it simple. Let's say we're in a 10% tax bracket. So if $500 comes into the business from a coaching client that we're working with, or a digital product that we sold, $500 comes in, we're going to take 10% of that, $50, and we're going to it's going to automatically transfer to a different bank account, right? Out of sight, out of mind. We don't want to see it piling up. And then on the due date, right before the due date, we're going to go into that account, and then we're going to make that estimated tax payment. So that's how I recommend my clients to do it. With every dollar that comes into the business, take whatever your tax rate is, whether it's 10%, 20%, 25, 30%, if it's 30% or more. If it's over 15%, we need to chat, right? So that we can help you get that tax liability down, because there's no reason why you should be paying over 15% in taxes. But, no matter what that number is, you're going to take that, you're going to transfer it into a different bank account, and then when you know that that quarterly tax payment is due, you're going to go into that bank account and you're going to make the payment. The IRS Electronic Federal Tax Payment System website, the one I was just telling you about, the ETPS, it allows you to schedule payments at any frequency that you choose. So that's another way that you can do it. If you don't want to transfer it to a different bank account and make that payment manually each quarter, then you can just set up auto drafts through that system, and then have them take the payments out, however you want to do it. If you want to do it per pay cycle, if you want to do it monthly, just whatever works better for you, right? Or you can send paper checks whenever you're ready to make a payment. So that is how you're going to cover your estimated tax payments. Y'all still following me? All right, let's talk about what happens if you don't pay enough estimated taxes, because there is a penalty for underpayment of estimated taxes. So if you don't pay enough taxes throughout the year, you'll owe a penalty. So typically you owe that penalty if your total estimated tax payments plus any withholdings that you had. So if you did work jobs and they did take out taxes, if they don't equal at least 90% of the tax for your current year, or 100% of the tax for your prior year, then you're going to owe that penalty fee. You're going to owe a fee for underpaying estimated tax payments. You will not be assessed a penalty if you owe less than $1,000 at the end of the year after all estimates and withholdings are applied. So if you have a tax liability under $1,000, you don't have to worry about paying a penalty if you didn't make those quarterly tax payments throughout the year. But if your tax liability is over $1,000 and you didn't pay at least 90% of the tax that you owe, or 100% of the tax that you owed in the prior year, then you're going to get that penalty. That penalty, I believe, don't quote me, I got to look at that penalty for you, but just Google it, okay? And then lastly, failure to pay. Failure to pay is a bit different. So this is assessed if you don't pay all the taxes by the due date, which is April 15th for individuals and for corporations, but it could be different for S corps and partnerships, right? The penalty is 0.5% of the unpaid taxes for each month that the tax remains unpaid, and that penalty cannot exceed 25% of the unpaid tax. So I get this question, do corporations owe estimated tax payments? Because what we were just talking about is for LLC business owners or pass-through entities like S corporations or partnerships, right? Because S corps and partnerships, the business doesn't pay taxes, it's passed through to the shareholder, which gets filed on your individual tax return. So individuals, LLCs, S corps, partnerships, you're paying those estimated tax payments. But yes, corporations also have to pay estimated taxes if they expect to owe $500 or more. So for the other entities, it's $1,000 or more. For corporations, if you plan to owe over $500, you must make estimated tax payments, and corporations pay those estimated taxes on Form 1120W, like Washington. And then lastly, I want to talk about your state taxes, because a lot of people forget. They just focus on the federal taxes and they aren't thinking about the state and the city. But states that assess annual income tax also require their taxpayers to make quarterly estimated payments. Not all states, so you have to see if your state qualifies, or reach out to me and I can let you know, reach out to an accountant. But generally, estimated payments align with the federal due dates, but for some states they don't, right? So you have to look into your own state requirements. You can go right to the state website and you can see when the estimated tax payments are due and if you have to pay them. And I'm just going to enter a caveat here, which has nothing to do with estimated tax payments, but you want to see what other requirements you have as a business owner. Like, do I have to pay franchise taxes in my state? Do I have to pay or do I have to file annual reports each year, which is another expense? So make sure you have a good understanding of your tax responsibilities and requirements as a business owner, right? That's it. That is it. Was this information helpful? I feel like I've been talking forever, but hopefully I covered the bases. Hopefully I cover all questions that you could have about estimated tax payments. Estimated taxes are just that. They're estimates. So you may not get it perfect every time. You don't have to be spot on. It's okay if you aren't. You just want to get close to it, right? At least 90% of the tax liability for the current year, or 100% of the tax liability for the prior year. But if you work with an accountant, right, if you have a skilled accountant, you can ensure your estimated taxes are as accurate as possible. And that's the goal, because we don't want that underpayment penalty, and we want to stay compliant with the IRS. So work with a skilled accountant to make sure that you're claiming all of your credits and deductions, you're considering all of your tax write-offs, all of your expenses, so that you can get the most accurate number as possible. So if you want to learn more about estimated tax payments and figure out exactly how much your coaching and consulting business has to pay, reach out to me today. Go ahead and click the link in the description of this video and schedule a time for us to chat. I would love to help. Again, I hope this video was helpful, and until the next video, be blessed.